For more stock news updates, remember to press the like button and subscribe. With that being said, let's get straight into the video. Palantir Technologies has officially begun supplying the United States Army with its next-generation ground system under a significant agreement valued at $178 million, commonly referred to as Titan, as reported by Bloomberg. This achievement represents a major step forward for the software firm in strengthening its partnership with the United States military, and highlights the growing importance of artificial intelligence-powered software in modern defense strategies. With warfare becoming increasingly reliant on data-driven decision-making, Palantir's advanced capabilities position the company as a critical player in shaping the future of military operations. At this time, Palantir has not confirmed a precise date for its next scheduled shipment, but the company anticipates completing the production and delivery of all 10 Titan systems by the year 2026. Once this initial phase is completed, the United States Army will evaluate the program's effectiveness and determine whether to proceed with large-scale manufacturing. Although the Army has not yet disclosed the exact number of units it intends to procure beyond the initial batch, current estimates suggest the final order could fall within a range of 100 to 150 systems. In March 2024, the Army awarded Palantir the $178 million agreement to construct these 10 next-generation ground systems, integrating artificial intelligence technology to enhance operational capabilities. The Titan system, formerly known as the Tactical Intelligence Targeting Access Node, represents a historic milestone in the defense sector, as it marks the first instance in which a software company has taken on the role of a primary contractor for the military. Traditionally, defense contracts of this scale have been awarded to companies specializing in hardware, weapons systems, and aerospace technology. However, the increasing reliance on artificial intelligence, machine learning, and real-time data analytics has transformed the way military operations are conducted, making software-driven solutions more critical than ever before. Palantir's Titan system operates by gathering intelligence from a vast array of sources, including satellites and other advanced surveillance equipment. This data is then processed using the company's cutting-edge artificial intelligence and analytics platforms to provide soldiers with superior situational awareness, improved decision-making capabilities, and more precise targeting information. The system was developed in collaboration with multiple defense technology partners, including Anduril Industries, Northrop Grumman, and L3, all of which contributed specialized expertise to enhance the effectiveness of Titan. Despite the promising advancements represented by Titan, Palantir faces growing concerns about potential reductions in United States defense spending. Last month, the Washington Post reported that Defense Secretary Pete Hegseth has outlined plans to implement annual budget cuts over the next 5 years. Given that Palantir is a leading provider of artificial intelligence-driven software and technology services for the military, such budget reductions could significantly impact the company's revenue streams. In response to these concerns, Palantir's stock has suffered a notable decline, dropping by more than 25% over the past 30 days. This downturn has been further exacerbated by recent large-scale stock sales by Chief Executive Officer Alex Karp, which have added to investor uncertainty. However, it is important to recognize that despite these short-term challenges, Palantir has continued to demonstrate strong financial performance. In 2024, the company generated an impressive $1.2 billion in revenue from contracts with the United States government, marking an increase of 30% compared to the previous year. This growth highlights Palantir's ability to secure and expand high-value government contracts even in the face of potential budgetary constraints. Analysts on Wall Street currently maintain a hold consensus rating on Palantir stock, with recommendations divided among 4 buy ratings, 10 hold ratings, and 4 sell ratings. The company stock has an average price target of $95.33, which suggests a potential upside of 18.5% from its present valuation. Given the current state of the stock, many investors are now asking the critical question: should they consider buying the dip in Palantir stock? Over the past year, shares of the enterprise software company have surged as much as 408%, reflecting strong investor optimism about the company's long-term prospects. However, recent trends indicate a shift in sentiment. Between February 14th and March 3rd, Palantir's stock price fell by 33%, raising concerns about the reasons behind this rapid sell-off. To understand whether this decline presents a buying opportunity, it is important to analyze the key factors that contributed to this market reaction. Investors typically decide to sell stocks for several reasons. Some may have opted to lock in their gains after Palantir's remarkable performance throughout 2024. However, Palantir's rapid downturn closely followed a key announcement from the White House. President Trump directed Defense Secretary Pete Hegseth to work alongside Pentagon officials to identify potential areas for defense budget reductions. Since Palantir's largest customer is the United States government, particularly defense and intelligence agencies, investors interpreted these proposed budget cuts as a potential threat to the company's revenue stability. This led to a wave of selling activity, which contributed to the sharp drop in Palantir's stock price. While these concerns are understandable, a deeper analysis suggests that the market reaction may have been exaggerated. There are three primary reasons why Palantir's 33% decline appears to be an overreaction. The first reason involves the broader relationship between major technology firms and the defense sector. In 2019, the Department of Defense launched an initiative known as the Joint Enterprise Defense Infrastructure, a cloud-based infrastructure program that was expected to be valued at up to $10 billion over a 10-year period. Leading technology firms including Microsoft, Amazon, Alphabet, and Oracle all competed for this lucrative contract. However, following controversy over the bidding process, the Pentagon ultimately canceled the program in 2021. The Defense Department later replaced this initiative with a new program in 2022, known as the Joint Warfighter Cloud Capability. Under this new structure, the Pentagon awarded contracts to all four of the aforementioned technology firms. When examining the stock market impact of Trump's proposed defense budget cuts, it becomes evident that Palantir has experienced significantly steeper losses than these major technology companies despite their own Pentagon contracts. The broader downturn in big technology stocks appears to be driven more by increased capital expenditures rather than concerns over the defense budget. The second key factor affecting Palantir's stock is its reliance on government contracts. While major technology companies generate substantial revenue from public sector clients, they maintain much more diversified business models. Although Palantir has historically been perceived as primarily a government contractor, the company has made significant strides in diversifying its revenue streams. While more than half of its revenue is still derived from public sector clients, this category also includes organizations beyond the United States government. Additionally, the company has seen remarkable growth in its private sector business. In the fourth quarter, revenue from United States government contracts increased by 45% year over year. However, Palantir's commercial segment in the United States experienced an even stronger expansion, growing by 64%. Finally, it is important to note that no final decisions have been made regarding reductions in United States defense spending. Some reports suggest that the Defense Department has been directed to identify ways to cut its budget by 8% annually, approximately $50 billion per year, to reallocate funds toward other federal priorities. However, there is also speculation that the Pentagon may not reduce its overall spending, but instead shift resources from lower priority initiatives toward critical military programs. If this scenario plays out, the potential impact on Palantir may be significantly lower than initially feared. In the end, Palantir Technologies has begun delivering its advanced Titan ground system to the United States Army as part of a $178 million agreement, marking a major step in its role as a key defense technology provider. The system, which integrates artificial intelligence and data analytics, enhances battlefield intelligence by collecting and processing information from various sources like satellites and sensors. While Palantir expects to complete all 10 units by 2026, the Army will later decide on broader production, with estimates ranging between 100 and 150 units. Despite strong revenue growth, including $1.2 billion from United States government contracts in 2024, a 30% increase year over year, Palantir stock has faced significant declines, dropping over 25% in the past month. This downturn stems from concerns over potential defense budget cuts announced by the White House, as well as Chief Executive Officer Alex Karp's recent stock sales. However, analysts remain divided on Palantir's outlook, with a hold consensus rating and an average price target suggesting an upside of 18.5%. Investors are now weighing whether the recent stock drop presents a buying opportunity, given Palantir's continued expansion into the private sector and its crucial role in military intelligence operations. For more stock news updates, remember to press the like button and subscribe. With that being said, I will see you in the next video.